Welcome back to another episode of the Lofty Lender's Homebuyer Education, where we explore tips, tricks, and stories that can help you plan for your next home purchase. Whether you're a first-time home buyer, a move-up buyer, an investor, or just looking to learn, we hope you gain a little bit of knowledge today. And today, Charlie, I think we want to talk about preparing for tax season as a first-time home buyer. And, we're not CPAs. Let's make sure that everybody knows that up front. But there are some things we've seen.
We don't have enough personality to be a CPA.
You're talking about?
We're supposed to file taxes? I read the wrong notes. Actually, that's something we have a problem with. Yeah, do file your taxes. A lot of people actually have refunds coming. They just don't want to file. Yeah.
You might owe some, but if you don't pay and you don't get your taxes filed, it ends up causing more issues later. So
yeah. Little prep work, like we always talk about, goes a long ways, and you just get to check it off your list, and hopefully it's a refund.
Well, some of the common questions we get are, what does filing my taxes have to do with buying a house? Or can't I just write everything off, Charlie? Because, I am self-employed and the government allows me to write everything off. Why do you care?
Oh, heavens. Now we have two different buckets that we'll go through. So, the regular first-time buyer, W-2 wage earner, it's just a good idea because underwriting likes to see consistency and you're required to do it. And part of the double checks, like when you check your credit, they check your income, they check your bank account, they check and make sure that what you filed with the IRS matches what we're using for underwriting. So that way it's a consistency and prove it's true. So unfortunately, gotta file taxes.
Yeah, but at the same time, sometimes you get that big fat refund that you were talking about before, and that actually leads into what we can do with that refund. And I think oftentimes first-time buyers especially, they are the ones that use that first time, that refund for something special, like maybe a down payment on a house.
You bet. And I think everything is, we work backwards. Monthly payment budget, cash to close budget. That refund is unexpected money. It may be expected, but it's an unknown amount until you receive it. So getting any access to money that you're just not used to having other than your paychecks is a nice boost to help you make whatever hurdles in your way. Paying off credit card, down payment on a house. We can use it to kind of play with credit scores and help improve your budget, improve your credit. There's a lot of little stuff. And that's the puzzle game part that you and I just love.
Yeah. And really the short answer of, do I need to file my taxes? The answer is your tax return can either help you buy a house or it might delay you from buying a house. It's not going to hurt you long term. It'll hurt you initially probably, right? But it delays everything.
So now we're going to go on to the self-employed bucket, it sounds like.
Yeah, I think we need to talk about that because I feel like that's, it doesn't pertain to everybody, of course, but there are definitely people out there that, when they're thinking about their tax returns, they're thinking about, okay, if I tell the government that I didn't make much money this year, then I'm not going to have to pay much in taxes and I am going to get that fat refund, Charlie. I don't want to pay a lot of taxes.
And nobody does. First and foremost, we want to take advantage of the rules that are there, just like in underwriting. There's rules that we can use to help someone get a better deal. And then there's rules just like that in the IRS allowances. So the IRS code is going to require you, report income, not just payments by cash or check, but income. Cash counts. But again, talk to your, tax filer CPA for that. But what we want to see, and I think we've seen a lot more of this, it's not just self-employed as your primary job. It could be self-employed with your DoorDash, Uber. Anything that's a side gig. Rental properties. You could really have a lot of side income that it's a pain to file that tax return. You might owe a little bit of tax, but it might really help your approval because you have more income as long as you've had it for more than, a little bit of time. You have some consistency there. That could really boost what underwriting is going to show your W-2 wages that you're used to, plus the side gig that you might get a few $100, a few $1,000, who knows? Knowing where those numbers are and having it to where we can help guide you through what budget is helpful and how to use those funds, self-employed becomes all that much more important because you don't get a paycheck. And if you do, it's your own paycheck. It doesn't count.
I think you're right when you say it kind of mixes in between, right? So you might be a W-2 employee and you have a home garden, for example, or maybe you're W-2, but you get a commission-based job. And, just one of the quirks about underwriting is that if you have commission, we have to get a tax return, 2 years tax returns to show that commission's been received. If you are maybe a statutory employee or a 1099 employee, you might not think of yourself as a standard self-employed person. However, as a 1099 employee, you do have to pay your taxes on your tax returns instead of having the employer take it out of your pay, or maybe you're a contract employee. There's just so many things that kind of ride that line of, am I employed because, that company's paying me. They're the only one paying me, but am I just contracts? Like, taxes are really important to file
Yeah.
for sure.
And really, it's if you get any income besides your W-2 hourly salary, however your job is set up, then you need to take and make sure what's appropriate. And we can help you get some good contacts too. There's the fast and easy click, 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 and you got to fill in your own blanks on something you don't understand for an online filing. There's some good local people that really aren't any more expensive when you factor in they're going to help hold your hand. How do you set it up? How do you get the best deduction? Because we don't necessarily know when we click our own taxes. We're not tax preparers. Get all the deductions you can. But like you said, writing off all the income, we really struggle with that too, because you don't want to write off all your income. That is not what being self-employed is about. You want to pay the highest tax you have to pay. That just means you made a whole bunch of money. Now, you're going to have legitimate deductions that you can take and reduce that, which is awesome. But we don't want to see the tax return written down to zero. That means you didn't make anything when you go to buy a house or borrow money for anything. We want to see something that is going to help underwriting show that you can budget and afford that. So there's a happy balance between pay the least amount of taxes, report enough income so you can get approved for what you want.
And I think sometimes people are like, well, I didn't drop my income all the way down to zero. An example of that might look like you made $75,000 for the year in gross receipts, and then you went ahead and wrote off, say, $40,000 in expenses because the IRS allows you to do so. And so you tell the IRS that you made $35,000 for the year and you pay taxes on just that $35,000. The downside is, from the income perspective for us, we're using net income for self-employed borrowers. So that $35,000 is all I can give you credit for the year. And I've had so many times that a person has filed their taxes and then come to us and said, here you go. I didn't report a lot in income because I didn't want to pay a lot of taxes. And then in order to amend their returns, they're going to have to pay more. Nobody wants to amend their return so they can go and pay extra in taxes. And the other piece of it too is, as a self-employed person, maybe you need to make, I don't know, say $10,000 a month in order to qualify for the house you're looking for based on your other debts and whatnot. Well, if you took 1 year and you just wrote a bunch of stuff off, the next year you might not make enough to offset to get back to $10,000 a month. You might need $240,000 in net income in order to qualify. It's so hard. It's really a long game for self-employed.
But again, this is where we like to have that conversation, because there's different ways to get approved for a loan. And there's different ways to file your taxes. And the two easiest that come to mind for me are, do you declare your gas receipts or do you claim mileage? Sometimes the tax preparer is going to say, don't care. But if you don't provide the miles and you provide the receipts, they're going to do that. Well, we don't get to give you any credit for that in underwriting. But if you do miles, now we can. And it's a dumb little thing until it's a larger dollar amount. It's not dumb anymore. Now it's like, well, hey, we gained $300, $400, $500 a month of usable income because of an add back. And on that same note, so, part 2, you can do Section 179 expenses. Talk to your tax preparer, but that's, you just write off a big chunk versus capitalizing and depreciating. And that's going to go over most of our heads. Talk to your tax preparer, but that depreciation, we get to count. You just don't get one big deduction. You get 5 years or 7 years or whatever the schedule from the IRS says. Huge difference. I had a Section 179 expense, and it, like you said, it wiped out almost everything 1 year. Versus if they would have broken that up, we would have had good, consistent income. They would have paid more tax this year, but less tax every other year. You just got to talk through it. See what your preference is. And if you're trying for one goal, the answer is different than if you're trying for another goal. And we love having those conversations with the tax preparers, accountants. As long as everybody tells you, here's your options, then you get a pick.
I remember I had a situation a few years ago where a lady had come to me and she wanted to buy a rental property. And she already had 2 or 3 rental properties. Can't remember exactly how many, but she had a couple of duplexes. And I just remember looking at it, and she was claiming the taxes on 2 out of the 3 for some reason. She's doing her own tax returns, of course. She was claiming the taxes on 2 out of the 3. She was claiming insurance on just one of them. She had some property repairs that she threw in just all in one lump sum, which is fine. But there were just all these little things that you're doing bits and pieces, but you're not doing it all clean. And there's so many things. I mean, taxes, insurance, mortgage interest, we can add all those things back when we're looking at your tax returns. You can use those as deductions to reduce your taxable income so you don't have to pay a lot in taxes. And yet that still allows us to add it right back and count for that as true income on the rental property. So got her over to a CPA, had her get her stuff cleaned up. Again, it didn't make sense for her to go back and update her prior year returns because she was going to owe a bunch of taxes. And so it was just a long-term plan of, okay, well, I've been doing it, on my own and kind of faking it through. But now I'm kind of to the point where I've got enough rentals that I need to start doing this correctly and appropriately so that my taxes, I'm getting the most benefit there, but also so I can qualify for that next rental property.
And stay out of IRS jail.
Yeah, well,
I
mean,
I don't know.
IRS isn't going to care if you don't like tell them that you paid a bunch of expenses and you're writing things off. They're probably okay with you paying them extra taxes, but I don't know.
That they are. But I mean, there's so many people shortcut and they aren't actually doing it right. We see a lot of things that are just wrong. Some things are debatable and some things are. I hope they don't catch that. I personally, I don't like audits. I've been audited. It is not fun. And so you want to get as aggressive, in my opinion, as you can and still pass the audit or actually not get audited. But yeah, it's a stress. People don't like to do taxes. I'm very comfortable with taxes, still don't like to do them, and get somebody who's going to help you with it. Get it from A to Z during the year. That way the tax return's not so bad to file. And if you are going to plan to ask for money, or you have any inkling of asking for money, grow the portfolio, build a new house, buy a new house, you don't want to go chintzy on everything to knock it all out to pay no taxes. You want to find that right mix, like you said. So when you do want it, you can get approved for what you like.
And I think, with current events in market, what we've seen is over the last few years, as you were talking about earlier, a lot of people do have those side gigs. They have those side hustles, or maybe they've got, they got 2 or 3 part-time jobs. They don't have a full-time job. They've just got a bunch of part-time jobs. And I mean, we're seeing that just be very consistent and normal anymore. And coming from my mom always told me, Kyle, you're going to get a full-time job. You're going to go for a job that's got a pension. You need a full-time salary, no commission, no bonuses. You just want to have that steady Eddie, keep your nose to the grind job. And my mom told me that long enough that I was like, I need to get commissioned as soon as possible because I can't even imagine living in that world for myself. Other people are fine with it, but with all that gig work and side hustles and all that kind of stuff, it's all that much more important to make sure that you're communicating with your lender prior to purchasing if that's something that's on your horizon soon, because ultimately we can't tell you how to file your taxes, but we can tell you what the underwriter's going to look for when they look at expenses that you did write off. And so then you can provide that information to your preparer and see what makes the most sense. Again, we can't coach you. We can't tell you what you should or should not do, but we can tell you how the mortgage process works. And then you can use your own situation.
Be aware. These are the things you got to watch for. They're going to get looked at. Take that into account when you're going there. And if the tax preparer has questions, we can always have those conversations. I think to do this podcast justice, Kyle, we have to at least cover the alternate programs. They're getting very popular.
Sure.
And it's a completely different podcast, but let's at least go through a little. When you hear it's, I don't have to do that, I can do this. There are alternate ways to do everything. In underwriting, it doesn't matter what loan you get. Underwriting is looking for the least amount of risk, that you can pay the bill because the institution does not want the property. They want you to make your payments. That's all they want. And then there's just the compliance. So you don't have to provide your tax returns. There are alternates. Just remember that whenever you are going to do something that is less, you're typically going to pay a little bit more because it's more risky. Now, some of them are very small differences, and they're great. Bank statement programs, you can get DSCR, so debt service coverage ratio for an investment property versus the rents collected. So there's a lot of good stuff, and then there's a lot of stuff to where you really provide almost nothing. The rates really jack up there, and you got to weigh whether or not it's worth it. So the more you do, typically the less you pay and the less headache you're going to have in underwriting if it's easily proven. But there are some great alternatives, and we can walk you through those as well.
Yeah, absolutely. And that's a good point. I mean, we're talking about everything about just standard run-of-the-mill Fannie Freddie FHA type stuff here with this episode today. There are definitely options if something you're like, oh, well, now I guess I'm 2 years out because I just wrote everything off. Well, let's talk. You might have other options, but this is, if you are getting ready to file your returns for the first year of being self-employed and you want to plan, this is a really good place to start so that you don't end up having to work with a different program, which has a higher interest rate, which has more risk, which has more XYZ. So absolutely.
Yep. Gotta love it.
All right. So a few actionable takeaways today. Number one, again, as always, talk to your lender. But in this case, you're going to talk to us before you file your tax returns. We want to help you put a plan in place so that you understand the things you need to communicate to your CPA. If you need to loop us in with your CPA, we're happy to talk to them as well. Most CPAs don't want advice from us, and that's fine. We're not here to give advice, but we're here to at least explain to you how the mortgage process works and help them as well. If you're self-employed or you have 1099 income, have that chat first. A 10-minute call could save you and potentially help you buy a house this year versus having to wait a while. Number two, avoid major financial changes during tax season. This is another one where we didn't talk about it too much, but you might open up a brand new bank account because you're like, oh, I just got a lot of money. I'm going to go throw that all into a brand new bank account and I'm not going to touch it. We've already talked about in the past some different things about opening up new accounts and trying to really limit the number of new accounts you have, but try not opening up a new account. Just set it aside into one of your bank accounts. We want to make it easy for the underwriter to follow. We want to see that deposit. We can match that up with your returns. If you're getting a return, I have to pay in this year, so I'm not bitter or anything.
Kyle's paying for the bridge.
There you go. Jeez. No, yeah, opening and closing of business entities. Oftentimes, this is kind of the time where people say, well, that business was kind of going away, so I'm going to go ahead and start up a new business. And it's the same thing. I still own both of them. I put all the assets from one into the other. If you close a bank account or a business account and you open up a new business, a new LLC, even if it's exactly the same and you're still 100% owner, it's still a new business. And it gets treated just like that. And that can be a real pain for people to find out after they went through that process. And finally, keeping clean records. I think this is one of the biggest things for us is when we reach out and we're asking for W-2s, and profit and loss, balance sheets, all those kinds of things. I understand self-employed. You're really good at your task, your tools, your job. You might not really be very good in the books, and that's okay. I mean, everybody has their pros, their cons, their flaws, whatever. But at the same time, try to keep receipts, try to keep everything for us. Charlie, you're laughing. What do you got?
I would actually take and tell people, have two piles. You have the I really need to save this pile. Nines, you're getting W-2s, you're getting big ticket statements, and then the receipts and stuff. So if we need to get granular and go into receipts because you don't do anything else other than keep a shoebox full, that's fine. But kind of categorize the most important. And if you have software, you can treat it a little easier because you've got it in there. We've got a track to it. Or ask. You can ask us anything, and we'll help you make sure, keep this. Don't so much worry about that. But just don't shred everything. You can shred it, but let's make sure we need it before it gets shred.
Fair. Yeah. Well, tax season isn't just about refunds. It's also for first-time buyers, move-up buyers. It's for buying a house. And so if that sounds like you, give us a shout. We'd love to connect with you. Otherwise, we hope you enjoyed the conversation and found it valuable today. Be sure to follow us on all social media platforms and subscribe to the podcast for more exciting episodes. And remember, stay curious. We'll see you next week on The Lofty Lender.
See y'all.